Crows use shiny things to buy stuff. Shiny things are currency. But some crows want their shiny things to do more than just sit there. Shiny things sitting in a nest don't grow. So crows invented a way to make shiny things work for them. Crows invented stocks. What is a stock? Big Crow wants to build a giant nest, the biggest nest in the entire park. A nest so big other crows would stop and stare. But Big Crow has a problem. Big Crow doesn't have enough shiny things to build it alone. So Big Crow comes up with a plan. Big Crow splits the nest into tiny pieces, thousands of tiny pieces. These pieces are called shares. Big Crow sells these shares to other crows in exchange for shiny things. Now other crows own a tiny piece of the nest. This is called a stock. Big Crow gets the shiny things needed to build. Other crows get ownership of a piece of something bigger than themselves. Everyone wins. Maybe. Why do crows buy stocks? Simple. Crows want more shiny things. If nest does well, share becomes worth more shiny things than crow originally paid. Crow bought 1 share for 10 shiny things. Nest grows. Business booms. Share is now worth 20 shiny things. Crow doubled shiny things without doing anything. Crow is very happy. But if nest does badly, share loses value. Crow bought share for 10 shiny things. Nest struggles. Bad decisions. Bad market. Share is now worth 3 shiny things. Crow has lost shiny things. Crow is not happy. This is the risk every crow must accept before buying a single share. What is the stock market? Crows need a place to buy and sell shares, a central location, organized, regulated, loud. So crows built the Shiny Exchange. Every single day, crows come to the Shiny Exchange to trade shares in different nests. Some crows are buying, some crows are selling. The price of each share changes constantly depending on how many crows want it at any given moment. Lots of crows want the share, price goes up. No crows want the share, price goes down. Simple supply and demand. It's basically a very loud, very chaotic branch full of crows screaming numbers at each other from sunrise to sunset. How does a nest list on the stock market? When a nest first decides to sell shares to the public, this is called an IPO, initial perch offering. The nest decides how many shares to create and what starting price to set. The first day of trading begins. Crows scramble to buy in. Sometimes the price rockets on day 1. Sometimes it crashes within hours. First days are unpredictable. Even the nest's own founders don't always know what will happen. Some of the most successful nests in history had terrible IPO days. Some of the worst nests had incredible ones. The market is strange like that. Types of stocks. Not all stocks are the same. Crows must understand the differences before spending a single shiny thing. Growth stocks. These are nests that are expanding rapidly, building new branches, entering new territories. They rarely pay dividends because they reinvest everything back into growing. Crow hopes the share price keeps climbing over time. High potential reward, high potential risk. Dividend stocks. These nests pay a crow a small amount of shiny things on a regular schedule just for holding the share. Quarterly, sometimes monthly. Slower price growth, but crow gets a steady trickle of shiny things, regardless of what the market is doing that day. Value stocks. These are nests that appear underpriced compared to what they are actually worth. Crow thinks the market got it wrong. Crow buys cheap, waits patiently, hopes the rest of the market eventually figures it out and the price corrects upward. Penny stocks. Very cheap shares in very small or unproven nests. Could multiply in value overnight, could vanish completely by morning. Most vanish completely by morning. What moves stock prices? Many things, more than most crows realize. Nest earnings. Every few months, nests report how many shiny things they made. If nest made more than crows expected, price jumps. If nest made less, price drops. Sometimes, even if nest made more, price still drops because crows expected even more. Markets are emotional like that.
News. One bad headline can destroy months of gains. One successful product launch can send a price soaring in hours. Crows react fast, sometimes too fast. Other crows. If a very famous crow with a massive following announces they love a particular nest, other crows pile in immediately. Price rises. This is called hype. Sometimes hype reflects genuine value. Sometimes hype is just noise. Crow must learn to tell the difference. Interest rates. When the cost of borrowing shiny things is high, nests find it harder to grow and expand. Profits shrink. Stock prices tend to fall across the board. When borrowing is cheap, nests invest more, hire more, grow faster. Stock prices tend to rise. Interest rates are one of the most powerful invisible forces in the entire shiny exchange. Global events, storms, droughts, political chaos, wars between crow territories. Any major disruption can shake the entire market at once. Sometimes markets recover quickly, sometimes they take years. How do crows actually make money from stocks? There are two main ways. Capital gains. Crow buys share at a low price, waits, sells share at a higher price later, keeps the difference. Simple in theory, harder in practice. Dividends. Nest pays crow a regular portion of profits simply for being a shareholder. Crow collects without selling anything. Some crows build entire passive income streams purely from dividend payments over many years. Many experienced crows combine both strategies. Buy strong nests, collect dividends along the way, sell years or decades later at a much higher price. This is called long-term investing. It is boring, it is slow, but most experts agree it is the smartest approach for the average crow. Risks every crow must understand. Markets go up, markets go down. Sometimes markets collapse entirely. In times of major crisis, the shiny exchange has lost nearly half its total value in a matter of months. Crows who panicked and sold at the bottom locked in their losses permanently. Crows who held on and stayed calm eventually recovered everything and then some. Time in the market almost always beats trying to time the market. Even the most experienced crows in the world consistently fail at predicting short-term price movements. Diversification is one of the most important concepts in investing. Don't put all shiny things into one nest. Spread across many nests, many industries, many crow territories around the world. If one nest burns to the ground, crow still has many others standing. Index funds. Not every crow wants to spend time researching individual nests. Perfectly understandable. So some crows invented index funds. Instead of picking one nest and hoping it performs, crow buys a tiny piece of every major nest in the market all at once through a single purchase. If the overall market grows over time, crow's investment grows with it. If one nest collapses, it barely registers. Lower individual risk, lower chance of massive overnight gains, but steady, reliable, historically consistent growth over long periods of time. Most honest financial crows will quietly admit that for the majority of investors, a simple index fund outperforms most active stock-picking strategies over a decade or more. Common mistakes crows make: buying high and selling low. Crow sees a price rising fast. Crow gets excited. Crow buys at the peak. Price drops. Crow panics. Crow sells at the lowest point. Crow has now done the exact opposite of what investing is supposed to achieve. This is the single most common mistake in the entire shiny exchange. Chasing hype. Someone on the branch is screaming about a revolutionary new nest. Everyone is talking about it. Crow buys without doing any research whatsoever. Nest turns out to be nothing. Shiny things are gone. Checking prices every 5 minutes. Crow refreshes the price constantly. Every small dip feels like a disaster. Every small gain feels like a reason to sell immediately. Crow makes impulsive decisions driven entirely by short-term emotion. Check less. Think in years, not minutes. Investing shiny things crow cannot afford to lose. Never invest emergency shiny things. Never invest borrowed shiny things. Only invest what crow is genuinely comfortable watching drop by 50% temporarily without panicking. Stocks are not a guaranteed path to wealth. Stocks are a tool. Like any tool, used correctly over a long period of time, they can build something significant. Used recklessly, impulsively, or without understanding, they can take everything. The best crows in the shiny exchange share one trait above all others: patience. They buy, they hold, they ignore the noise, they let time do the work. And remember, shiny things left sitting in a nest stay the same forever. Shiny things invested wisely grow into something far greater. The early crow gets the worm, but the patient crow gets the whole tree.